what would you do? Because Andrew says that yes, it's not a good it is a good strategy probably to sit on some bit of cash as well. How are you looking at it? Because I don't think so that the FI selling is going to be abated anytime soon. Yes, probably the quantum will reduce, but they getting into the buying spree is still far away. How are you looking at it from a retail perspective?
Yeah, so I agree to the fact that you couldn't for sure believe that this is the end of the FI selling, and just because you had a pullback on Friday and today, because it was so surprising that even on Friday the FI selling was there in the cash market. So it's a matter of principle whether you want to hold cash or not hold cash. As a matter of principle, I don't believe in sitting on cash, because if clients have given you money, it's basically for you to get invested. But I think there will be sectoral churn. I think the top sectors where one could find comfort, and because there is a propensity for INR to depreciate, there would be bigger margin of safety in buying into export denominated sector. And because in the US, there would be a propensity to have corporate tax cuts and invest in technology. Technology is one area where I could find very high comfort to invest even in current market levels. Same goes for a pharmaceutical. Even that space is quite conducive. I think the banks as a whole, a large weighted in the index, has seen decent earnings growth. Valuations are extremely conducive. And, there we have a decent margin of safety. So in spite of, the markets not looking too great at the Nifty level, I think sectorally, these would be some of the sectors where one could find comfort. The high beta sectors, which is relying a whole lot on government spends and private capex, look very vulnerable even now. Even though there is a belief that H2 would be much better in terms of government spends, because government does understand where the problems are and they will lift up the spending, which has been anemic in the first half. All of that is within the realm of possibilities yet to be seen. But today the markets seem to be believing that that's all come, and which may not be true. So valuation comfort is not there in the investment related theme, so to speak, and definitely not there in the private capex side of things. Private capex is just not happening. The private capex is totally absent. So these would be vulnerable sectors and areas clearly to be avoided.
Right. So these are sectors to avoid from a private capex perspective, and that's an interesting take. In fact, when you talk about the government spend as well, from the budgeted in terms of FY25, hardly I think 40% is what the government has spent. The remainder, whether the government will be able to catch up or not, is what we need to wait and see. Andrew, again, for you, which are the sectors that you would like to actually bet on, apart from leaving some cash on the sidelines, if you have to look at the markets now?
Just to clarify about the cash on the sidelines, what I'm trying to say there is that if you want to wait for some of these events to play out, if you're more conservative, then it's a strategy you could use, because when markets fall, as we've seen with mid caps and small caps, everything gets tarred with the same brush, even the good ones. So that's the time just to kind of let the dust settle a bit. But in terms of sectors, I think if the government spending is going to pick up, then obviously capital goods sector looks good. I think the banking sector, because valuations are quite reasonable, then that remains an area. But I don't think the RBI is going to cut rates. I think it's going to be well into 2025 now, which would be means that NIMs will remain under pressure for the banking sector, and regulations seem to be getting tighter. So I'm not. I think the banks versus NBFCs, I'd probably have banks at this point. Then, of course, I'd look at the themes that will continue to play out. One is the electronic manufacturing sector, which obviously will be a beneficiary of what Trump policies will be going forward, and hospitality, travel experiences. I was keen to hear what the Indian hotels management was saying. It's and if you speak to anybody, hotels are just booked between now and February for the the end of March, actually, for the wedding season. So I think that sector continues to do well, and premiumization in terms of in terms of the drink sector, both non-alcoholic and alcoholic. So those are the themes I like, and I think I'll continue to invest in. But in the short term, volatility of the markets will be there, particularly going into January.